Welcome everyone to the final quarterly report for the calendar year 2021. For those of you who came on board in our final capital raise, which took place end of Q3, early Q4, as we go through this report, I'll give you a little guidance so that you can become familiar. So on the right-hand side on the top, that number reflects the total capital that's currently deployed in the fund. The second number there reflects the stated value of all of the assets that are owned by Fund One. And that's something that we update on a regular basis with Paravest. Third number there is the current debt across the portfolio. And then the final number is the appreciation that has occurred to date across the portfolio. And all of those are represented in the pie chart down below. This overview section, this is more of a macro highlights from the quarter. So in general, the quarter focused on training the new staff that we hired and improving the processes and procedures at every one of our parks. So it's really important that all of our employees are rowing in the same direction and that our procedures are constantly being fine-tuned so that we can build our business to scale. On the acquisition front, so unfortunately, the 70 space park that I was referencing in previous reports, the seller changed their mind, so we will not be buying that park, but we will continue to look at opportunities that could be a solution. On the business side, this is the most exciting news to share for the quarter. So we were able to bring on two really high quality experienced staff members. Maria came on board as our regional property manager, and she has almost 2 decades of manufactured housing experience. And then Scott came on board as our construction manager, and he has over a decade of manufactured housing experience as well. So really excited about bringing this caliber of people on board to be part of our staff at 5210. Probably even more excited that it's likely these folks are going to teach us a thing or two as well. So the portfolio, again, performed better than the original projections. Rent raises went into effect across all of our parks on January 1st. And because Scott came on board, some of our construction projects have gotten a big boost as well. This section of the report, as I go through this, normally it will just be a narrative, but you can pay attention to this right-hand side where the property status is updated. So when we buy a park, everything is planned. Immediately, when things go into process, I'll update them. And then as we complete items, that'll be updated as well. So the longer we own the property or the further down the path we get, the more items will be completed. So Oasis Gardens is doing great. This is also called the OG RV Resort. For those of you who just came on board with us, there's about 85% of the spaces in this park are permanent park model RVs. They never leave, so it operates much like a mobile home park. But there's about 20 transient RV spaces that get used by snowbirds every year. So this is more of a resort RV park, even though it behaves more like a mobile home park because of the permanent nature of the park models. So the only thing that we have left to do here, potentially we could fill some of those vacant spaces with park models, but we're getting pretty good income from a seasonal RV use. Central Park Estates, this park is we're getting close to the end of the heavy lifting here. So this particular park, when we bought it, had about 40% of the spaces had vacant mobile homes on them that needed to be renovated. So we've gotten pretty good at chewing through those, renovating the home and selling them at a pace of about 1 per quarter. So we're getting towards the tail end of that. But Central Park Estates is also potentially, we see some market risk here. So this is to be determined, but it's a military town. So this Central Park Estates is located in Sierra Vista, Arizona. That's half the population is Fort Huachuca. Fort Huachuca obviously goes up and down, or the town of Sierra Vista booms and busts with the defense budget. So if the current administration adjusts the defense budget, it potentially could have create some market risk there. So we'll monitor that. We may want to exit this park early just to insulate ourselves from that potential risk. Melody Court, for those of you who just came on board, this park is in Yuma. This has about 25% of the spaces also in this park had vacant park-owned homes on them. So again, we're chewing through those at a nice clip. We got renovation crews that fix those up, and then we sell those off to new tenants. Palo Verde Hills, this one's way ahead of the game. So this one's kind of on cruise control now. You'll see most of the items are complete. And all we really have left here is raising rents to market. And that'll take several years because those rents were quite a bit below market when we acquired that park. Country Breeze. Now, this is probably Nate's favorite park. This particular park, when we bought it, we inherited 159 residents who were conditioned by the previous owner to pay their rent whenever they got around to it. And there really wasn't much for park rules and regulations. So it's taken about 1.5 years to get it turned around, but now we finally have tenants paying on time at the same day every month. The park has really gotten cleaned up. So all the junk and whatnot that were in people's yards, we got that all cleaned up and it's looking really nice. And all of the tenants are rowing in the same direction now as well. So finally got those operations to the spot where it's running like a park's supposed to run. And then the mobile homes at Palm Harbor Estates. So for those of you who are not familiar with this part of the investment in Fund 1, Fund 2 acquired a park called Palm Harbor Estates. But as we acquired that park, there was 100 mobile homes that were owned by the dad that were acquired as well. So Fund 1 invested in those homes. And then you'll see here shortly that if we find a park to replace those 100 homes, we will, and if that's going to be accretive to the fund, then we would replace the investment in the homes for an investment in the park. And that's what that 70 space park was supposed to do. So we're going to keep our eyes out. If we find a park that's suitable and it could be more favorable to the fund to acquire a park than those homes, then we would do that. Also, you'll see here that Santa Rita Heights is still on this page. I'll remove this in future reports, but just wanted to make sure that I shared the verified results with all of you. So Verivest goes through a verification process that begins with the closing statement from when we acquired a property, and it ends with the closing statement from when we sold, and all the bank accounts being closed out and all those kind of things. So they just finished the verification of that because all those bank accounts got closed in Q4. So these numbers right here are actual verified by Verivest. On the market side of things, mobile home parks are still in super high demand. So nothing's really changed there. The only thing that has changed is because interest rates potentially are going to go up, that we're finally starting to see cap rates and prices flatten out. So that's a good thing for all of us. You know, obviously interest rates going up typically will reflect prices coming down. So the final page of the report, this is the fund performance page. Over here on the top right, you'll see a percentage. Now this percentage demonstrates where we are across the portfolio in aggregate compared to where we projected that we would be when we originally underwrote the parks at acquisition. So right now we're 16.7% ahead of our original projections across the entire portfolio. So we're doing well. The second number here is the distributable net cash flow for the quarter. This third number here is the distribution as a percentage for the quarter. And then this fourth number, which I show C statements this quarter, this would have shown you your annualized cash on cash return. But since that also includes the sale of the proceeds from Santa Rita Heights, that everybody's report is going to look different. Those of you who came on towards the end of the year will look different than those of you who were already here. So look at your statements that you get directly from Verivest to see what your actual numbers are. And then the unit value here is currently 1,147. And that's reflective of just December 31st of 2021. So in summary here, Q4 proved to be another strong quarter. We expect that same, the portfolio is fairly stable now. There's not a lot of uncertainty. So we continue to expect to see stable performance moving forward. We met the preferred return to investors in 2021. And then on the tax front, all of our tax prep is complete. That was done at the end of January. Verivest went through their review and they completed that. And then recently that went to CBIZ, who does the final tax work and issues the K1. So expect to see our K1 delivery on time, on or before the 31st of March. The distributions are in process. Those of you who receive a direct deposit will see those in your bank account. Let 3 to 5 days go by because there's a holiday here. Every financial institution will post those at a different time, but those have been pressed. The go button has been pressed. And then, of course, those of you who've chosen to have your distribution reinvested, you'll see your paid-in capital amount increase on the Verivest dashboard. So the P&L, balance sheet, your individual statement are all available in your investor dashboard, along with a copy of this report. And you can always access your dashboard through the button on the main page of 5210 website. So that concludes our report for the end of 2021. If you have any questions, reach out to me. And of course, if you want to explore an investment with us, or somebody who'd be a good fit, feel free to have them reach out to me as well. So thank you. Happy 2021 to everybody, and looking forward to an amazing 2022.